So welcome back to Trade Pro FX. Today I will be explaining step by step how I do my analysis on volatility markets. So like here, this is volatility 10 index. So when you come, you just choose any volatility. Like let's start with this volatility 10 index, and then after we choose our volatility like that, you can see I'm on the 24 hours. So because I'm not a swing trader, the first thing, the more the time frame you trade, there are people we call the swing traders, and others are scalpers. So for the scalpers, how do? They use the lower time frames. So based on that, the swing traders use longer time frames like the 1 hour, 4 hours, and 24 hours. For the swing traders, use 15, 5, and 1 minute. So I'll just click at the 1 minute and then observe at how the market is being shown. So when I zoom out, let me zoom out and see how the market currently is behaving. Let me just show you how I do my analysis. Looking at the market currently, there is somewhere, what do you note? There is somewhere here. So let's try to zoom out well. So looking at the market currently as it is, there are zones. You just pick your tools, then you pick like that horizontal tool, mark that area that you see there is something the market is doing. So this was the first time the market reached at that point, that is 63.88. So looking at this 63.88, this is now a key, that a key, what we call the resistance. This now becomes a key area or a key zone, which shows a resistant zone. So with this, now you are conversant to know that the market has reacted so many times whenever it has reached this point. So with that knowledge, we have already done some analysis. You need to make sure your market looks very clean, or your chart looks very clean, I mean. So we have already noted that point. So let's now go and identify another place, another key level, which is on this chart. So the first point, I've already marked my resistance zone, and this price has tested this level multiple times. This is the first time, and this is the second time, the third time, and we can see the candlesticks been formed around this point, like these ones. We have very long wicks. So with these long wicks, the first tap, the second tap, so this one suggests a potential double top formation, indicating a bearish pressure from this resistant zone. So anytime the market reaches here, we tweak a bearish movement. So there is some bearish pressure from when the market reaches this resistant zone. Remember, this is 1 minute. So the next thing is just to observe how the candlesticks are behaving. If I just zoom out very slowly, looking at these candlesticks, can you see something here? We can see that the most recent candlesticks show very small bodied candlesticks. So these small bodied candlesticks around this point shows me that there is a loss of momentum as the market is trying to move above. So that's another key I've already noted. So the next point is to look for the support, and then you draw along the point you can see. So looking at this point here, around this point here, we can see that around the 33.76 here, let's just put it at that point from the lowest point here. So at this 73.76, this is the point I'm looking at, guys. So at the market price here, so looking at this point here, what do you see? You can see along this point here, it shows that the market has reacted on this point. So the price has bounced off when the market has reached this point. So this confirms that this is a strong support and a break. And in case there is a break below this point here now, and I told you, you never think that because I've marked with that yellow candles, that the yellow white, I told you this is a zone. This is a zone. It is just that we do it for making the market at least the charts that at least were somehow clean. But this is what I'm talking about now. This one becomes a zone. The same case when we go here, this one becomes the zone for the resistance zone. I hope you have understood first that those 2 points. So we have those 2 points. Today, generally, I'm just showing you how you observe and read the market. So you have noted the support. The first thing is the resistance. So let me write it here. So resistant key level on let's say this is 63.88. So then we have another point here, which is uh, the support, and that's 63.76. So we have those points. Oh, I've deleted the other one. So those points are very key essential things to note. So we have those 2 points to note, and keep in mind that those are the key points you should be observing currently. So you have now known the support and the resistance, how to identify the most recent point with the highest most reversal point. So the next thing, looking at the time frame, we can look at this time frame. This is 7:45. This is 8 a.m. Looking at this point here, what do you see? According to me, I can see that at around this 8 a.m., there was a morning star pattern, and this could be seen there. It can be seen very near this support level, indicating there was a reversal change towards the upside. So whenever you came up across this point, then you will know it is on the support level, so a potential uptrend. So that's the first, those are the key things that you look. Then near the resistance, if by just looking at the near the resistance, let's just return it. What do we see? We see a lot of support, bearish pin bars. So it shows and confirms to you that now this is a clear resistant zone. So very good pin bars, and then you can see this is a pin bar, and then so this one shows you a good rejection, showing a potential bearish trend. So looking at, maybe we can put some indicators like the RSI. The relative strength index. You can see the relative strength index at default. Let's just observe at it. It's currently at 42. So it indicates now that the market is trying to move to, it's trying to be on, we can see it's at 42. So when the market, because we can see at around this point, let me show you. At around the 68.88, the market was, let's see where the market was. So at around this key point here, let me see the point the market was before as we were talking. So let's see. So the market was around this point here. So it was around 52, 50, 52. This is the point I'm looking. It was around this point here. So it was indicating that it was on a neutral momentum. So it was not on the overbought or oversold, but a move below or above 60. You can see the 60 point here. So if the market closes above 60, so if the market closes above 60, so it will show us that there is a bullish strength. So when we have seen now it has broken below the 50, so now we can signify that with that drop from the 50, it shows a bearish continuation. So we are on our support, we are on our resistance zone here, but our RSI has shown us across below this 50, so a potential bearish continuation. So then that's for the RSI. We don't rely on only indicators, so we just look at the MACD. Let's see how the MACD is behaving. So for the MACD, we can see there was a crossover here, a cross line above the signal line, which indicates this was the first point there was a crossover. So if you want to, let me show you what I'm talking about when I talk about the signal line and all those. So you can see the signal line is being represented. Maybe we can put these to red so that you can understand well, and I increase that. So you can see what I've put. The red is the signal line. So the MACD, after crossing above, you can see after it crossed above here, then this is the MACD line. After crossing the mark, we have the MACD and the signal line. So if you look, and the signal line, the MACD line is represented by blue color, as you have seen here. So the MACD is blue, signal red. So that for easy identification. So when I talk about the MACD, which is the blue color, crossing above the signal line, which is red in color, it usually indicates a bullish movement. And the opposite is when when the signal line crosses above the MACD line, it shows a bearish movement. As you can see, the histogram shows decreasing bar currently, suggesting weakening of the which suggested the weakening of this bullish trend. And then now these bars, the bars I'm talking about, these one, this shows the histogram bars showing the decrease bars, suggesting the weakening of the current bullish movement or the bullish momentum towards the bearish momentum. So let's put another indicator which is usually key. So that's the ATR. If you observe at the ATR, like the ATR is this one. So let's see where it is currently at 1.15 something. So 59. So this indicates that the markets are very steady but not overly volatile. So it just indicates a moderate volatility. So the price currently is on a consolidating mode between the first point here and the next point here. So a breakout either level will determine the next significant move. So that's how now we start our analysis. So let me first remove these key indicators. So we now have our points to look at. So we have this point here. So any point now, the breakouts of these points now is what will determine our key direction now. So between the 2 points now is what will determine the next significant move. So above the 63.90, the 63.88 we marked, this will is a potential target. And then when we break this point here like that, we will be targeting this area here. So we will be targeting 60, what, 60, around 60, we can say 6400. So 63.90. So this will be our potential zone 63. We should look at something like that. So that one can be our potential area to pick a point from that end. So next, if there will be a potential breakout at this area here, we will look at around let's say 63.70. Let's put there 63.70. So this is 63.80. So we will be looking drop towards 63.80. Let's say this was 63.88. 63 below. Let's see a potential breakout from the 63.76, which we was here. What time frame are we? So 63.88, we see an breakout, we target 6400. Then below 60, this area here, we target the next higher, the next point here, which is this one. Okay, this is the next point here. So when we break this area here, when we break the 63.75, this point, we target below, which is 63.70. So we might put our our target profit as 63.70 at that point. So currently we are on a consolidation zone, so we can erase these. We are currently on this zone here. Our market is on this zone and it is on the 1 minute. So this is the consolidating zone here. Do you see? That is where we are. We are consolidating along that zone. So any point now breakout, any breakout along that point, we take our trade. So in case there is a potential drop towards the 63.76, where we from here we target 63.70 or still lower. So now any possible movement, if there is a bullish scenario, if the price sustains above the resistance zone, which is 63.88, 63.90, supported by the MACD on crossover and the rising RSI, we could see a move upward. So you just look at the indicators, how they will behave. So look for a confirmation with a strong bullish candlestick. So for us to take a trade now, we are looking for a good strong bullish. Let me mark that and fill it with a green. So let me fill that with green. So in case we see a strong bullish green candlestick, we now know we have taken the trade upwards, targeting the highest point on that point. So then in case if the bearish price rejects the resistance and breaks below this 63.76, expect a further bearish trend towards the area we have said, and then this should be a red candlestick. So those are the two things that we expect to see. So let's see how the market behaves. So any potential movement towards that point, we can target now our market using those two. Now our entries now will not be along this zone. Do you see this zone here? Our market won't be this zone. So as a trader, you avoid this point. That's how we do it, unless you are a scalper. So our target will be upwards or downwards. That's how we pick our trades. I hope we are together. So that's how you do your analysis. That's how you do your analysis. You define your strategy based on these observations. Then you can relate and you can see our resistance is showing uh, some 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 consolidation, I mean some reaction. The market is trying to move down, and then when it reaches on the support, it will still act the same. So that's how we take our trades. Now I've shown you for someone who waits, who is patient. That's how we wait for trades, not just doing it for the sake. That's how you wait for trades, then enter trades, not just entering any trade anyhow. Because if you don't know what you are doing, you would have entered around this zone here, which is not the same case because we have identified our key levels. So that's how it is done. But in case you want to scalp any around this point, what you look now is the candlestick patterns. You can see this is a double top, a triple top, I mean. So this is the first, the second one, the third one, and I've shown you very many times the triple top, what. So if you want to know triple top forex, so you can see how it normally looks: the first top, second top, third top, and then we go down. So if you know you are a scalper, you can pick a trade here, looking at the candlestick patterns. But for someone who wants to trade in a way which is respectable, you know what you are doing, you wait and analyze trades like that. So for us, we will wait to see any breakout and we target the next move. That's how patiently traders work and trade. So in case you are doing analysis on the derivative trading platform, MT5 trading, that's how you do it in the simplest way possible. Then the same thing you do here, the same thing you can do on trading, forex trading. So that's it. Let's meet in the next video, and I'll still wait for this market to react. After it reacts, I will upload the video and show you what went above. So let's see what will move at like that.